Hey, welcome everybody to the 40 Finance channel. Well, we are officially in earnings season now, and a lot of questions are going to be answered over the next few weeks, particularly now that we have the bank stocks out of the way. We start to get into some of the heavy hitters, really starting on Tuesday and beyond. So what I wanted to do today is take a look at which stocks have been performing the best here in the first 23 days of January, so year to date, and see if that can give us any insight on which direction this market's heading. And as I dug into this and did some research, man, the year-to-date performers who are at the top of the list, it's a very, very interesting list, and maybe it's a sign of things to come for the rest of the market here in 2023. Okay, as always, we're going to use Seeking Alpha. I put this stock screener here together using their tools. This is all USA large and mega caps, about 700 plus stocks, as you can see right here. And of course, if you're interested in learning more about Seeking Alpha, my affiliate link is in the description, gives you instant access to a 50% off discount. Comes out to about 120 bucks or so for your first 12 months, so 10 bucks a month, hard to beat it. Check it out in the description. So we were talking about year-to-date performance. Out of these 700 stocks that go across the S&P and the NASDAQ, this is based entirely on market cap, okay? So plus $10 billion in market cap. And what we're going to do here is we're going to go to Performance, the Performance tab for all these stocks. Let it load. We're going to click on Year-to-Date Performance. And that's how we get to our best performers, obviously, for the first part of 2023. As a matter of fact, today is the 23rd day of 2023. And interesting enough, right here at the top, you've got Coinbase, which is really surprising that they've kept their large cap status above $10 billion. But here they are. And of course, we know the base price of Bitcoin was at a low of 16.5 or something like that, and I believe it's over 22,000 or so right now. So no doubt that had a big influence here in the first few weeks, but it's up 55% in the last 3 weeks or so. Okay, this one, Carnival Corporation, they're up 45%. Obviously, the prospects for vacations are a lot better, I would say, in 2023, certainly from a health standpoint, and the fact that you have China reopening. Anytime you have one of the biggest countries in the world go from basically not traveling at all to, a much more relaxed approach, it's going to be huge for travel stocks if that does continue. And I'm going to switch back so we can read these off a little bit better. They're still in the same sort order. I just switched to the summary tab so that we could read these companies faster. Exact Sciences, Warner Brothers, Zillow. And it's really interesting to see Zillow here when you think about the sentiment going on with the real estate market right now. I mean, most people are predicting some sort of collapse or epic drop in home values. And yet here you see Zillow, one of the top performers of the year, even with rising interest rates. After that, you've got another Carnival. They must be doing some sort of restructuring to have two different types in here, but I don't follow that stock, so I don't know. United Airlines, Cleveland-Cliffs, so, call it the steel industry, getting involved in the top performers. American Airlines, Royal Caribbean, Expedia, Rocket Companies. Funny enough, I have Rocket Companies stock as well, and it'll take a while before I get my head above water in that one, but we know that real estate goes through phases. I think what is the most surprising on these real estate stocks is the fact that they're top performer in 2023, and I haven't seen a positive headline about real estate in a very long time. The 16th spot, we have Roblox, Southern Copper, Uber, NVIDIA, Western Digital, Match Group, Block. Then you see more travel stocks. You got Hyatt Hotels, Wynn Resorts, and so on. Now you go back to that performance tab. I think we stopped around Hyatt Hotels. Long story short, all of those names that we went through, you can see have done at least 20% growth from a price appreciation standpoint here in the first days of January. All right, let's take a quick look over here on this growth tab, get an idea of what the revenue projections are for these companies in terms of growth. Obviously, if you've been watching CNBC, you know that mostly sentiment for growth next year is about at zero, right? So all the projections, everyone's on the same page as far as interest rates keep creeping up and then they stay flat, and that's just going to crush corporate dreams, right? But what we see in these top performing stocks anyway, from a revenue perspective, the projections are pretty impressive. So you have Coinbase plus 31%, Carnival plus 131%, Exact Sciences double digits, Warner Brothers, which I think is a merger, so you have to be careful with this number, but 60%. Zillow is negative, but keep in mind with Zillow that they got out of their home buying business and they sold off all their inventory last year. So when you look ahead to 2023, they're not going to have the revenue from selling those houses, so the minus 17% is likely not as bad as you think. United Airlines plus 30%, Cleveland-Cliffs plus 55% on the revenue from a projection standpoint. American Airlines, Expedia, plus 35%. Rocket, they're down significantly, minus 35%. That's probably not surprising, but there must be another story going on in terms of cutting costs. And we got Roblox plus 20, Uber plus 50, NVIDIA plus 21%, Match, Square. You get the picture. Very interesting when you dig into these top performers as they relate to the sentiment on the street. Now, if you want to see something which I would say is even crazier than all that, let's look at the EPS projections for these companies for their next quarter. And of course, starting at the top with Coinbase, negative EPS or no earnings per share. Exact Sciences, again, you've got a negative. Warner Brothers, same thing. Zillow might eke out a couple pennies in their next quarter if things go as planned. United Airlines returning to profitability. Cleveland-Cliffs, negative. American Airlines, they've got $1 per share potentially. Expedia, $1.68. Then we go down to Uber, negative. NVIDIA, positive. Western Digital, negative. Square, 29 cents a share in their next earnings. These are not huge EPS companies by any stretch of the imagination, and there's nothing really here on these screens that would say to me, you know, like whiz banger of a bottom line pushing through. The story is in growth, and to me what's notable about that is where we've been over the past year. Right, where, you know, growth estimates have come down considerably, and we know what happened with the stock market in general last year. Are we seeing an uptick in growth estimates and perhaps an uptick in growth stocks? Okay, so that was our list of top performers, large cap and mega cap stocks for the first few weeks of 2023. Obviously, it was very interesting that it was a growth orientated list, not a lot of bottom line earnings per share going on in there, and we didn't see any oil stocks. We didn't see any consumer staples. You know, some of those winners that grinded through 2022, and you put all that together, and to me, the stock market is showing some signs of turning around. Now, how long does it take? Nobody knows. But if anything else, if you were kicking around some growth names to get into, maybe that you missed in the huge run-up in 2021, and you always sort of adored the stock for whatever reason, it might be time to look at it and at least watch the behavior of these stocks over the earnings season. So we know we're probably locked in for a couple rate hikes of 0.25% going through these first 5 or 6 months, right? But what happens if things get paused on, you know, restrictive policy? What happens if rate hikes get paused? It doesn't mean they have to go down. And then we see a good summer of travel. We see China and tourism start to come out and about again. That can be a huge boom for consumer discretionary. It can be a huge boom for technology, depending on what pockets you're looking at. So I guess the point here is, for me, depending on how you looked at the data that I just shared, we could start to see a small bounce off the floor, if you will, and it could be a great opportunity if you're a long-term investor to think about some of those growth names that you might have put in a corner because they were obviously too risky last year. All right, before you go, don't forget to check out that special offer for Seeking Alpha Premium. My affiliate link's in the description. Let me know what you guys are seeing in the market. Do you see a growth stock rebound anytime soon? As always, thank you so much for watching. We'll see you on the next video.